Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks. I'm live with another live session with you all. Slightly late, was busy with a lot of things at home, but I'm live here and would like to discuss with you one of the sectors that seems to be doing pretty well, and it looks like that it is coming back after a lot of, you can say, uh, selling that has seen over years, but now it seems like it is coming back into fashion. So this is one of the sectors that I will talk to you about, and will answer your queries as well. And this sector has been neglected for a while, for the last at least 1 year, by many of the investors, even large investors. But it looks like the numbers are turning around. One of the companies in that sector has come out with very strong numbers. So we'll talk about that afternoon. Supreet, afternoon. Sayed Tariq, hello. Uh, Anirudh, a very good afternoon to you. Greetings to you, Sivaramakrishnan. Uh, so hopefully we'll discuss about these points. Let more people join in. It's a Sunday. Hopefully more people will join in, and we'll have a detailed discussion on this sector. Plus, we'll answer your queries as well, and we'll talk about the markets a little bit. So before we get things going with the basic topic, I would like to just say hello to all of you and a happy Eid to you. Uh, would also like to tell you that sooner, probably in a month or 2 months' time, I will be bringing whatever course that I was talking about earlier. I would be bringing that probably in a video format for Patreon members. So that's a pretty good news for those who are on Patreon and who will continue to be there. So if you are a monthly member there, you would be able to, you can say, have access to that video. It would be a video format kind of a thing. One video every month would be published in that regard. So that will be there for sure. So, all right. So, let's just begin the session with a little talk about the markets per se. So, the markets kept on cheering and doing well. It was around 16,200, 300 already, and it has moved up 1,000 points over the last couple of weeks. Have done extremely well since May. I mean, end of May, early June, it wasn't doing that well, but now we are seeing that the markets are recovering, and there are talks that the market may have made a bottom, uh, probably a month and a half back. I think it is too early to say that. I still believe that we will be having more selling in August and September. It depends on how far the market goes up in July. If the market really goes up, say in the next week or 2 weeks' time, then probably you should be ready for massive selling in August. If the market goes closer to 16,800, 17,000, but if the market reverses immediately and doesn't go up more, then we could have a rally in August as well. But uh, as far as my experience is concerned on that regard, and this is purely for educational purposes, I believe that the market might have at least 1 week more of run up left in it, and the stocks may run up more, and probably it might just continue to go up for the next 10, 12 days. So uh, around 20th or 25th of July, the move could continue, and then the selling would begin, because the market would have gone up more than 10% from the lows up till then. And then probably the last round of selling from FIIs, DIIs, you'll see in August till late August for 4 or 5 weeks, and then from September onwards, things will start bottoming out completely. That's my assessment completely, and I ought to be wrong also here. I have the right to be wrong. You can have your own assessment that okay, the market might have made a bottom and it will continue to perform. But I believe consistent performance, as I have said time and again, might happen from September, mid September onwards, as the festive season would move upon us. So that would be the apt time probably when the real move will begin, mid September till late September, and up till then the market could still be volatile. And those like me, I mean, who are down 25, 30%, 20% on their portfolios might continue to be down till September, and then the move will happen in their portfolio as well if you have a mid cap portfolio at that. So that's the call on the markets. And now coming back to the point I was making. So the sector I wanted to talk to you about is one of my favorites, probably their favorite sector. Uh, that I love talking about, and that is the consumer sector. In the consumer domain, a lot of stocks have got beaten down because of the inflationary pressure and the fear of more inflation going forward. I think things are much better, and the kind of results, I'm sorry, the kind of results that DMart has shown tells a very different story than what people would have thought about. So, DMart per se has come out with very strong results, stupendous results, if I may say that. 10,000 crores of sales versus 5,100 crores of sales in, you can say, June of 2021. So that was the call. And if we go back, I think it was around September of 19, the sales was around 6,000 crores. So the sales number is pretty magnificent. I think this was the first time it has touched 10,000 crores in a quarter, which is quite good. It had a margin of around 10% versus 3 4%, 6% that was delivering. It delivered a margin of 8% last year in March 2021, 9% in December 2020. So it was coming there. And now I think the reversal has taken place in December 19. The margin was around, operating profit margin was around 9%. This time around, the margin has come out to be 10%, which is pretty good. Other income of 29 crores, a net profit of around 640 crores, and an EPS closer to 10 rupees for the quarter. That all tells you, I mean, 10 rupees for the quarter, versus even if I look at FY19, the whole EPS was around 14 and a half rupees, and FY19 was a clean year. In FY20, the EPS was around 20 rupees. So it is back to its best performances, and I think we are going to see a massive rally in DMart from here on in. And this is just a precursor. I believe that going forward, you will see consumer companies do well, mid cap consumer companies do very well. Things could be up and down. Some companies might do well immediately from this quarter, some would do well from December quarter, but I believe from December quarter onwards, things will look totally different. And that is why I'm saying that when the months when the festive season begins, or this time around between October to February, March, the festive season will have a lot of sales, because this will be a first clean year out of 3 years in which there will be a lot of buying, shopping, and moving around places because there is no pandemic. So I think it is time to get into specific consumer companies which are not FMCG like, but there are companies which are consumer centric, such as, and these are all no recommendation but just examples, such as Century Plyboard, you have Astral, you have Polycab, you have many other companies in other domains like VIP, like Dixon, DMart for sure, which I talked about, Bata, you have Relaxo, Liberty in that domain as well. You have Asian Paints, Pidilite, and some of these I might be holding as well. You have Berger, etc. I mean, all these companies in the consumer sector across the board are, in my opinion, relatively priced, not very cheap but not expensive either, and they could become expensive as the year goes by. So I think 2022 by year end and whole of 23, you will see a big move in all these consumer centric stocks. So if I would have been having money, I would have definitely bought into major consumer companies which are market leaders in their domain, and held on to them for 18 months, would have made a lot of money. So I believe that the problem of inflation is probably behind us. One or two more rate hikes will certainly, you can say, absorb all these inflationary pressures, and inflation will get curtailed. So probably it's a one quarter phenomena till September. we will see that, and from October onwards things will get better. So I think this is the time to probably uh, get into these companies, get into specific consumer centric companies which you have researched on from a 18 months point of view. Again, I'm stressing the fact that next 6 months, if somebody wants to trade for next 6 months, it will be very difficult. But for the next 18 months, I believe that even automobile and ancillaries look good. From a 18 months perspective, you can even double your money in some of the stocks if they could really do extremely well. So that is the call on that on this sector. So I'm ready to answer your queries. Kindly use the super chat, super sticker feature that will help me grow channel. That will help you also ask me questions and ink out answers in greater detail. Okay. I would say, or I think both Astral and Prince Spice, but buy diligently, buy in a staggered manner, and you should do well in both these companies. I think Dixon around 3,000 could be good, but I think after this result of DMart, even Dixon might continue to do well. But you will get opportunity in the next 3 4 months to buy lower on Dixon, and that would be good opportunity to buy from a 1 year perspective. Kilpest is very attractively priced. I have said time and again a disclaimer. I have the stock in my portfolio from a 10 15 year point of view. I am holding that. I don't know when the performance would kick in, but over the next 3 4 years can do extremely well. I believe that the EPS that it is set to produce or it is producing, uh, the stock is trading at very attractive valuations at 14 times, 13 14 times earnings. Okay, happy to all, Mr. Pawar. Happy to you as well. Uh, I think yes. I think Devyani International is a very decent stock to buy into, and see, I normally look at leaders in all these spaces. So if you look at the space of Devyani International, I would rather buy into a Jubilant Foodworks at 500, 520, 530, all those levels, because Jubilant is coming back after a lot of consolidation and decline, and after a corporate move that is taking place, that a new CEO is coming in. So I think that looks good as well. I think Varun Beverages has run up. There could be another 10 15% that is left. But I think Varun is a good buy around January as a seasonal trade rather than buying for a long term or something of that sort. FL at these levels look good from a 2 year perspective. If you have money, you can buy at these levels. If you have bought into it, say at 1100, 1200, hold on to the stock from a 2 year perspective. It's a 2000 rupees stock. That's what I feel. So if you have not bought, you can buy at these levels, but have a 18 months to 2 years perspective on FL. So Gland Pharma, I have not researched that much about the company, but the stock looks good technically to buy into from a 12 to 18 months perspective. But fundamentally, I need to do further research to talk about it. See, Titan is a buy at these levels also. I think it was a screaming buy at 1850, 1900. I have talked about it. Another consumer company that could do well. I believe in the next 18 months to 2 years, you will see 3,000 plus on the stock easily in that time frame. Fine organics. I'm not that gung ho on most chemical companies. I would say avoid those companies. I think consumer centric or IT related companies are good. TCS results were good as well. I will see the move from tomorrow onwards. I believe TCS, the way the numbers have come in, I'm pretty positive about it. The way the results are, I think 3,500, 3,600 could be coming in short term. I think long term target of 4,500 is intact on the stock. Another stock that could be accumulated here. See, DFM Foods is expensive. Now, this is where the difference lies. The company isn't, you can say, growing. The profits isn't growing that much, and the company is trading at 70 80 times earnings. I think better to avoid at this point of time DFM. Up 2 3 times in what time frame? It depends on that. So something like a DMart can double over the next 3 years easily. I think over the next 2 to 3 years, if DMart keep producing the kind of numbers it is producing, it can easily double from here. Uh, so large companies like HUL etc. might not make you a lot of money. Say HUL, Dabur, Colgate, or so on and so forth. but mid cap and small cap companies should end up doing well. So, Healthcare Global, another good company in this field of diagnostics and healthcare. Again, I won't say that the returns would be immediate in the next 6 to 8 months. So, if you have a long term point of view, then definitely you can probably buy into a Healthcare Global. So SL Propag, I would say, and avoid with a kind of a ban on most plastics and everything that is coming in, packaging and all that. There could be some sort of selling in this stock as well. ONGC is a complete avoid. I think whatever run up for the crude had to happen had taken place, and now I think crude might reverse below 100 very soon. So it's an avoid. It's a pure crude play. At this point of time, I won't be buying into it. Latent View is a good IT stock from a 3 4 year perspective. No immediate reward again, but do you can buy from a 2 to 3 year perspective with a 18-20% CAGR return. That's the call. Tarzan's product, I have not looked at the company in detail, so I won't be able to comment on it. Tata Consumer, I think, can go to 820, 830 in this run up that we are seeing. I think it's better to book profits there. I think it's expensive. Better to buy around 720, 730 later on. So that's a call on Tata Consumer. So that's a part. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you get my videos straight away when I post it. And do subscribe to the Patreon network. Thanks a lot.